Hey there, everyone. Ryan Schul here. Welcome to my channel. So today I want to talk about how we can detect bull and bear phases in the stock market. We'll get into this in just a minute. This is the 2008 financial crisis right here. If I show you this chart right, so anything that's red is kind of bearish, and anything that's not red is kind of bullish, right? So we have a couple bear phases, some down market trends. This was the 2008 financial crisis. And this is a Plotly chart, of course, so you can zoom in, you can zoom out. This was the COVID crisis over here. So where is this? Actually, wait a second. We had one bear that started here. And so is the COVID thing, right? And you know my opinion on that. I think it was fake. I talked to some doctors and they said it's just a cold and a flu. Why do we shut down planet Earth for some people that got a cold? Like nobody can answer this question, right? It's just a distraction. So that's the thing. So how do we get to bull and bear phases, and how do we understand this and profit from this, right? Like all my videos are about efficiency, optimization, profit, right? I got my MBA in finance from Johns Hopkins. I understand finance. I've been on Wall Street for 22 years. So how do we do profit making, regime switching, Markov switching, it's called, analysis for bull and bear phases, right? So there's a few things that we can focus on. A bull regime is when returns tend to be higher and volatility is lower and drawdown is less severe and you're just making money, right? Like everything is up, right? So what's a bear regime? It's when things are negative on average and volatility spikes, or there's a big correlation and everything is just going haywire, right? So some people love bulls. Most people love bulls, I think. Some people love bears, and that's how you position yourself, right? But you have to estimate the probability of being in a bull market or bear market regime. And how do you understand what this is, right? And like, how do you, like, ultimately, I'm going to prove in a few minutes here, how do you project into the future what is going to be a bull and what's going to be a bear, right? Because I can say in the past 100 years or 200 years or past 10 years or whatever, I can tell you exactly what happened in the past, and it's 100% accurate. I can tell you exactly what has happened and why it's happened, and all these factors that go into the outcome, right? And what is the output of this scenario and why does it happen? I can tell you exactly. But that's fine. That's all well and good. That's fine. But how do you project into the future what's going to happen next? That is the opportunity to make profits, right? So we want to look at forward-looking probabilities and Markov structures, right? And portfolio strategies and designs, and how do we profit from this, and how do we communicate this to our shareholders, to our investors, to our stakeholders, and how do we develop some kind of intuition for these profit-making opportunities, right? So let me go ahead and hit Control-Enter here on this cell. I'm going to share all the code with you. I will literally download this right now, okay? And I will share all this Python code with you guys right now. So there's a couple things to focus on. If we look at this right here, 0.0009, right, times 252, there's 252 trading days in a year. I've said this in many videos. 252 times this profit, you're going to make about 22.7% profit per year. So this is a good profit. So there is one lady, I never met her, I'm not very fond of her. What is the name? Let me see. Sorry, sometimes I go off track a little bit in some of these videos. What was the woman's name? Sorry, I'm going a little bit off topic here. Oh, I know it. Kathy Woods. Okay, that's it. Kathy Woods. That's the one. Yeah. Okay, so this is the one, not to promote her or anything. I'm not even gonna click that thing. I don't even know what that is. Okay, Kathy Wood. Okay, that's the one I was thinking of. And I've never met her. I don't know if she's good or bad, but whatever. She says, "Oh, we're gonna make all these amazing returns and all this stuff, and we're gonna profit from that." Look at guys, the straight truth. This is called straight data science. This is 100% truth. Okay, she makes some money. She loses some money. It's kind of break even. She makes a little profit. Um, I don't even know how much. I'd have to Google it and see how much. But the point is, if you get 0.9% return per day times 252 days, you'd have 22%. You would blow Kathy Woods out of the water, okay? She doesn't even know what water is. She has no common common sense of what water is. You would blow her out of the water if you made this kind of return, right? So that's a very good return for this kind of investment, right? And if you're bullish, this would be negative. This comes from right here, okay? By the way, this comes from this chart. If this was negative, this is a bear, right? So just to make things straight, this is a bull, right? This is a bear, and you would lose about 27 0.7%. If it's a bull, 22.2%. So let's forget about that woman. I'm not going to mention her name again. I don't like her. I don't know anything about her. I never met her. I don't know anything. The media seems to promote her and they seem to like her for some reason. I don't understand what that even is, but whatever. If you want to go down the path, go for it. And God bless you for that. Like, so I'm just telling you the truth, 100% the truth. Okay. So if I hit Control Enter here, and I'm going to share all the code with you, you can see what the returns are. Okay. And is this bull probability? Yes or no? Or what is the regime that you are sitting in? Is this a bull or a bear? Okay. So that's the returns that we're looking at. We're trying to predict based on historical returns what's happened in the past. Okay, and I can tell you 100% accuracy, and I will give you $10 billion. And when you have $10 billion, I'll give you $10 billion if you can prove that this is wrong. Right? I can tell you exactly what has happened in the past, and it's 100% accurate, guaranteed. Take that to the bank. Okay, but the thing is, we want to forecast into the future what is going to happen next. That is the game here. That's the scale. That's the game. That's the outcome. That's what we're trying to do. So if I hit Control Enter here, we can see the probability of a bull market or a bear market. This is what we looked at before when I opened the video. This is what we looked at. We saw some bear markets, right? If it's red, it's down. You can zoom in with these plotly charts. Very nice. This is kind of like horizontal here. This is a little bit bearish, a little bit up, on sideways, down, 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 down. Double click to get out of it. So you can see overall the market started here at 0%, and now it's at 1.968, almost 200% return since, what was this, 2003? When did we start this thing? Okay, so let me save this. I'm sorry, guys. I apologize. So this thing has bugged out on me. This is an old laptop. I have to upgrade soon. Once I start making money on YouTube, I promise I'm going to get a new laptop, but YouTube has paid me nothing. I've been on this channel for 13 or 14 months, never made a penny on this thing. I wish they would give you some subsidies, but they refuse to do it. So, okay, so since 2000. Okay, so since 2000, if you invest money in the S&P 500, you would make 200%, right? So if you put in 1 million, you'd have 2 million right now. Sorry, 3 million, right? Because it's up 200%, right? So that's fine. So how can we predict the probability of a bull or bear into the future, right? We want to look at future horizons, right? And we want to understand the probability, because I can't tell you, okay, this is going to be a bull and this is going to be a bear, or this is going to be in between. I can't tell you that. I can say it, but that's just fake. That's false. Like, nobody's really going to listen to that if you actually think about it, right? But I can tell you a probability of that coming, of that outcome, right? So everything is based on a normal distribution curve, a bell curve, and everything is based on probabilities. Like, I look at the weather. Okay, on the weather, they'll say, okay, like 50% chance of rain, 90% chance, 100% chance, 100% chance of sunshine. And the weather has got it right. If somebody in the stock market or somebody in the investment business is talking to you and they will say, there's a guarantee, that is literally illegal. You can sue the person for saying that. There's no guarantee of anything whatsoever. If anybody says it to you, just sue that person, okay? There's no guarantee whatsoever of anything on Wall Street happening ever, okay? I've been on Wall Street for 22 years. There's no guarantee, but you can calculate probabilities pretty accurate, okay? And you can say there is a mean return of 0.00096 per day, right? And if you multiply that by 252 days, you get about 22% profit, right? And if there is an empirical return of negative 0.0011061, roughly annualized, it's about negative chance of losing about 26% per year, right? So we can calculate probabilities. Very easy. It's very easy to do that. There's no guarantee whatsoever on Wall Street, okay? Nobody is going to guarantee you anything. If they do, sue the person because that's illegal, okay? So we can go ahead and say the probability of a bull market based on historical returns. I just showed you everything to pull the money to, pull the historical prices, fetch the data, and go ahead and calculate future returns. We know the probability of a bull in 3 months is 73%. The probability of a bear is about 26%. In 6 months, it's about 69% and 30%, right? They offset each other, right? Like if this is 69, 70, this is 0.30. One is the opposite of the other, right? So that's pretty certain. So you can say in the next 3 months, 6 months, 12 months, the probability of a bull, 73%, and 3 months, 69% in 6 months, and 69% in 12 months. So it's probably a good idea to invest your money. Now, the market could flip in one day. There's no guarantee whatsoever, right? That's why we have the offset over here. This is the offset. The market could flip. I remember in 1989, there was a big flip, Black Monday. Some people went into the market on the Friday before, whatever the date was. You can look it up on your calendar. And, they expected, historically, like the market was up and things are going to be fine and we're going to make a lot of money. But it can change in the blink of an eye, right? So there's no guarantee whatsoever, but we can say, historically, this is the probability of this outcome, right? So Control Enter to run this. We have 73% and 27%. It's just a plot of this right here, right? So that's what we're looking at, 69.30, 69.30. So 69.78, and that's just rounding. So we can see the chart. I always say a picture is worth 1,000 words, right? If you can just show people a picture or a plot or a chart, that is worth 1,000 words, and you can save a lot of time and a lot of effort too, right? So the probability of a bull regime today is about 1%, right? Or close to it. And this means that the model thinks you're likely to already be in a bull regime. But there's a decay over time, 10, 20, 50 days out. This isn't because the model predicts a bear market will come. It's because there's a mean reversion, right? So everything goes back to the mean. So you can go up, 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 and it's going to come down, guaranteed. You can go down and down and down, and it's going to come up, guaranteed, right? Everything comes back to a mean. There's a mean reversion Markov chain, right? And that's just the normal way that the market has worked for hundreds of years. So I don't remember when the stock market was invented, 1789 or something like that. I don't like to go off on these tangents, but sometimes I do it. Just curious, that's all. Try origin. Oh, 1606. Oh, that was even earlier. I thought it was like late 1700s, 1606. Pretty close, pretty close. So now it's 2025. So more than 400 years, the market has always reverted to a mean. This is called a Markov chain, right? And everything goes back to the mean. So you can have a bull today and it goes into a bear and comes back to a bull. You can have a bear today, goes to a bull and comes back to a bear, right? Everything goes back over a period of time. And you have to look at these frequencies, 3 months, 6 months, 12-month horizons. Okay, so the model tries to predict into the future what is going to happen next. And you don't have absolute certainty here. There's no guarantee whatsoever. And if somebody says there's a guarantee, that's illegal. You can sue them, okay? And you probably make more money from suing the guy that says, I guarantee this, than you can make in the market, right? But given the estimated transition probabilities between bulls and bears and the probabilities that I just showed you, right, there's still mostly a bull market over time converging to the mean, and it's about 70% up, okay? So if you look here, I showed you this view before, it's about 70% of the time is up. You can see this. This is historical. I'm not making this up. This is truth. This channel is called Straight Data Science. This is straight truth, straight up 100% guaranteed truth. As far as I know it now, if somebody says, the grass is pink or the grass is blue, you can say whatever you want to say, okay, but that's not truth. You can't, truth is truth. You can't say something and then nature becomes that thing. Like, this is truth. The grass is green. So that's what I'm showing you here. So that's it. I saved this file, I think. Let me check my download folder. Regime switching model. Yep, I got it. Okay, so I'm going to put this up on YouTube very soon, and I'll present all this code to you with the video, and you'll have everything you need. Copy paste it into your own Jupyter notebook and run it. You have everything you need, guys. Okay, love you. Thanks for the support. And I'm going to wrap this one up right now, and I'll see you in the next one. Thanks. Talk to you soon. Bye.